Hello. Dylan Lange, branch manager and home loan officer at Evergreen Home Loans here locally in Bellingham. And as you guys know, our brand is Whatcom Home Loans. On the website, WhatcomHomeLoans.com. Rebranded everything. So if you haven't checked out the new website, go to WhatcomHomeLoans.com. It's got all of the past mortgage update videos, different videos on loan programs, the blended rate calculator that I spoke about a few months ago. I always have to show my NMLS number here for compliance reasons. But reworked it, kind of showed our stats from last year, the amount of families we served, the loan production, the whole picture of the team, entered in all the Google reviews and Zillow reviews and experience.com. Just made it really slick. Went with the black and white, which I really, really like. So check that out if you haven't seen it before. Also have a testimonials page, contact us, and then where you can apply through there. But today, what I want to talk about, one is this market is heating up. And I said this a few months ago. I had some clients that were looking in the King County area. And I always say when Seattle sneezes, we get the cold. Well, we're starting to feel the cold right now because King County was bonkers. A few months ago, I had clients offering $200,000, $300,000 over asking price on $1.1 million houses, escalating to 1.3, 1.4 million, and not getting them, doing 10-day close, waiving their financing, multiple offer situations, all this crazy stuff. And I started feeling that in December, January, and I said, it's going to happen in Bellingham, right? And we're starting to feel that. A lot of multiple offer situations happening right now. You need to know your programs. You need to be prepared. You need to be pre-underwritten as a buyer. If you're a seller, get your house ready. If you're waiting for some reason, there's a lot of pent-up buyer demand there. If you need to sell to buy, that's where I want to talk about our bridge loan product. So we have a traditional step-up bridge loan product where you sell your current property and then you can buy a more expensive home, a bigger home, and then you get permanent financing. So how it works is you go up to 70% loan to value on the bridge loan. You can utilize that equity. You have 4 months to sell your departing residence, and then we use that equity to purchase your next home. We've also kind of flipped this because I've been getting just an influx of actual step down buyers where they own a $2 million house in Seattle. They want to buy a $1 million house in Bellingham. They're not going to have that permanent loan at the end that the step up loan requires. And so we're going to talk about the step down loan. But one thing, so I posted this on LinkedIn on Friday. So just this last week, and I'm going to pat myself on the back a little bit, got five properties under contract in the last week. Once again, talking about this market heating up. There's a lot more buyers. There's more inventory coming on the market. When I talk about you need to be prepared, 4 out of these 5 clients were had multiple offers, and 5 out of 5 were completely pre-underwritten. So this client here that's buying this property in Cedar Woolley, pre-underwritten for about 6 months, been looking for the right property. This one here, these gentlemen have been pre-approved. 2 brothers that are buying it have been pre-underwritten, right? And once again, there's a difference between being pre-approved and pre-underwritten. Pre-underwritten, we send your file all the way through underwriting. We approve you with our Security Plus seller guarantee program, which backs your offer by $5,000. Once again, 4 out of 5 of these were multiple offer situations. 5 out of 5 got the property. 5 out of 5 were pre-underwritten. So get your finances in order. Get them in. Don't wait till Friday when your dream home pops up and then you need to rush. This one pre-underwritten for, a year, looking for the right house, little vacation home in Blaine. This gal pre-underwritten, actually got this one done pretty quick in about 2 days up in Point Roberts. And then this gal that's buying this one down in Puyallup was pre-underwritten for about 3-4 months. So that's a small sample size of where the market's going, but I think it's very, very important to acknowledge that. So let's jump into the nugget of the month. So step down. So once again, I have a lot of people interested in a bridge loan product, and I would say, 70, 80% of them are actually looking for a step down loan. So I worked with the president of our company through we meet monthly. We do a Skunkworks product development meeting. I said, hey, I've got a lot of people that own their house outright, $1.5 million home, and they want to buy a $1 million home in Bellingham. They want to move up to be near grandkids, right? It's typically baby boomers, maybe older demographic. So we need to create a product here where we have short-term financing. So here's how it works. So it's traditional bridge loan product. This is our bridge loan product. You have 4 months to sell your property. There's an origination fee of 1.5%. The bridge loan can go up to $500,000 and then a max CLTV of 70%. So that means if your property is worth $1 million, you can only lend up to $700,000. And let's say you have a $200,000 first mortgage on it. Well, we can give you $500,000 for the bridge loan, right? Because that's 70% of value with the two properties. Minimum credit score is 680, and there's some other criteria on there as well. The origination fee is 1.5%. Okay. So if you're borrowing $500,000 on a bridge loan, which typically we don't do the whole thing, right? $7,500 to get that bridge loan. That's the maximum amount it's going to be because the bridge loan can't exceed $500,000. I'm explaining some of these fees because the main question is always, well, what is this going to cost me? Because typically, a bridge loan is 3 different loans. When we're doing a step-up product, we've got the bridge loan, we've got the purchase loan, which is a step-up loan, then we've got the permanent financing once the home sells. With the step-down, really there's only 2 loans. You've got your bridge loan and then your step-down purchase, because then once you sell your home, you're paying off all the loans. So it would be the same financing here. You'd get the bridge loan, and then on your takeout loan, we require a 2.5% fee on it. Once again, because we know we're not going to get a permanent loan. However, the kicker is we will give you 2% of that money back if the buyer of your departing home uses Evergreen Home Loans. Okay. So let's say that you get the bridge loan, and let's just get this handy calculator out, and you get a bridge loan, and your house in Seattle is worth $2 million. You get a $500,000 bridge loan. You're buying $1 million house in Bellingham. Okay. The $1 million, right? You take away the $500,000 because that's the bridge loan. So it's going to be $7,500 to get that $500,000 bridge loan. And then for $500,000, that's the remaining amount for the purchase loan, because you're using $500,000 for the bridge. It's $1 million purchase price. So you've got a 2.5% fee. So it's going to cost $12,500 for that purchase loan. Not a small amount of money, plus the $7,500. You're up in 20 grand in fees. That doesn't include escrow, title, appraisals, third-party fees. However, we'll give the client $200 back. So let's do that, 0.02. We will give them $10,000 back. So really only costs that $2,500 to get that loan, plus the $7,500 for the bridge. A lot of times, once again, the bridge loan, you only need $200,000 or so down. So there's a certain amount that you need down for the step down purchase. But you'll have to work with your real estate agent. So when you list your property, there's ways that you can incentivize a buyer to use Evergreen Home Loans, because you're going to get $10,000 back in this scenario. Maybe you offer them a few $1,000 credit, or, if there's multiple offers, right? Looking at Evergreen Home Loans, then you get that $10,000, that 2% back of whatever that origination fee is. So that is an alternative. Once again, it's a higher cost option because Evergreen, we make money on the purchase loan, on the takeout loan. So on a traditional step-up loan, we have that permanent financing. On a step down, you're going to pay off the property, or your client's going to pay off that property cash once they sell the property. So once again, if we get the purchase loan on their departing residence, we'll give 2% of that back. So contact me if you have any questions. I know some of that stuff could be really, really confusing, but let's look at rates. So rate trajectory here. So last month when I sent this out was end of February. 30-year fixed average was in the high 6s. Now we're, still in the high 6s, gone down maybe a 0.25% in rate. We're still down from our all-time high of almost 8% here in October, which I still say was the best time to buy a house because now the market has absolutely gone bonkers. Let's look at mortgage applications. It's always a great indication of who's raising their hand saying they want to buy a home. Up 9.7% in March, 7.1% in the second week, and then down slightly. These are national averages for rates and mortgage applications. It just shows you the buyer demand is back. It's the spring market, right? Things are looking better. More listings are coming up, but the buyers are back. It's getting more competitive. You need to be prepared. You need to have your pencil sharp. You need to get pre-underwritten, get the Security Plus approval so you have that extra edge. Talk with your real estate agent. They will tell you how valuable that is. And then let's look at mortgage rates. This is on a $700,000 purchase price, 10% down, 780 credit, primary, single family, all that good stuff. a 6.375 would be 1.931% in points. What that means is 1.9% of your loan amount in a fee to get that 6.375. Your principal and interest would be 39.30. So yeah, you'd be mid to high sixes if you wanted to do less of a buy down on there. So mortgage trend, once again, the mortgage rate trend is going down. What does that create, right? What is the spring market? Mortgage rates going down. What does that create? It creates more demand. So the mortgage application trend is up. Really what's happened in the market here is PCE came out at 2.8%. That's a huge inflationary gauge for the Fed. The markets were closed for Good Friday. So we haven't really gotten the reaction until Monday. It's just been a volatile market. I mean, if you look at the bond market, green is good, red is bad. So this is COVID. This is when rates were 2.75%. So when bond yields are up in this 112, 114, mortgage rates are low. So this is it. When people say, I'm going to wait for rates to go back down to COVID levels, long way to go. So you keep waiting. But you can see how volatile it's been, these peaks and valleys, right? So green is good. We've seen some really positive things since February 13th, where we had, a rough day there. But the Fed will be out talking. PCE came out at 2.8%, which is expectations. So I anticipate the trajectory of rates to continue to gradually come down. We're in an election year. We don't need to get political on all of this, but we're in an election year. It's going to be volatile. My biggest thing has always been don't wait to buy. If you've got the credit, the income, the assets, get pre-approved, get pre-underwritten, look at the numbers. Don't wait in this market to buy because it's getting more and more competitive as people wait. Let's see. I think that's all I've got. Underwriting turn times are really quick. Once again, if you're somebody that wants to get pre-underwritten, you're hearing this, you're seeing how busy the market is. Once I have your file, it takes about a week to go through the pre-underwriting process. I've got to look at it. My processor has to look at it, and underwriting has to review it. Take the week, get your finances in order, do the application, credit, income, assets. Let's get that verified. Let's get you the Security Plus approval so that you're able to compete in this market. If you're a real estate agent, if you're just somebody that's found this on social media, get people in the pre-underwriting process. It's very important. When you look at my closings, you look at my pendings from this last week, many of those individuals are pre-underwritten. So that's my one thing for March. Hope you had an awesome month. Hope you had an awesome Easter weekend. If you're watching this on a Sunday, great. I'm going to go out and enjoy the sunshine. All right. Catch you on the next month.